Okay, I've just gone short here. Doesn't seem to be marking the bars correctly ever, but I went short right here on that bar. After we had the minor spike in volume with 2 weak climax bars back to back into this high, and then it reverses down out of that high. Here I attempted a short after this churn bar on divergence into yesterday's close on the 5-minute after a nice little ABC pattern, and then took 1 tick on it here after it reversed and tried to move higher. I attempted a short here but didn't get filled, and then finally after seeing this went ahead and got short again. This is what stopped it here, this churn bar, the doji. So you can see the buying pressure came in, then it turned back up, and now it's going back down. So possibly this could be going to new lows, but I think I'll probably just take 3 to 1, 4 to 1 on this, maybe. Take whatever it can give me. I have an initial 7-tick stop, so whatever this thing can give me, I'll take. This is a climax bar and a minor spike breaking this previous low, but I doubt that's the end of the move. I'd like to see this low get taken out before I want to exit. There's a climax bar on the tick chart back up, so maybe that'll be enough to stop it, and then we can roll back down from here. Maybe. Okay, there we get the churn bar on the tick chart, churn bar on the 1 minute, and then the selling pressure comes back in. So now we're going down, we're breaking this low finally. We do have very high volume per second right here, but that's just because we're running these stops. I think I will go ahead and take an exit right here. A climax churn bar followed by a churn bar. It's also an extreme spike in volume, and I got about 30 ticks, about 28 ticks after risking 7. So a nice 4 to 1 trade, which is very nice. Alright, so that'll be my one and done for the day. I did take 2, but of course I only made 1 tick on this previous trade. So anyway, just wanted to show another example of fine-tuning some of these little faster day trades using this type of analysis. Okay, so let's go back and see what all was coming together at this area, why this was such a good area to trade from, and then after taking such a short little target on this, because I'm showing an example of using just a few charts rather than using the full set of higher time frame charts with the hourly, the half hour, the daily, and so on. Let's go back and let's look at those higher time frame charts to get an idea of where our target should have been for this trade rather than taking just a 4 to 1. This should have been one of those easy 10 to 15 to 1 trades with no problem. So let's go through and look at what all is coming together at this area. So number 1, it's the VWAP. All right, that's the volume weighted average price. That's the average price of all the contracts traded since the beginning of the session, which is, for the ETH session, it's the end of the previous day. Okay, so that's where we pulled back to. After a strong reversal down, we pulled back to the VWAP on this nice kind of ABC correction. And then when we draw that trend line, the auto trend channel, so I'll delete it and redraw it. We go from low to find the next high, and we have the median line perfectly right there. And then on the tick chart, just to show you how this comes together so perfectly here, we draw from low to find the high, and you can see the fib, the 100% extension. So this wave is almost identical to this wave. So I delete it, and I'll delete the CD line. We draw from low to find the next high. We have the median line intersecting the auto line right where the CD line intersects and the 100%, so everything comes together literally on that bar right there. So when it reversed off of that, I went short, and then here it pulled back to it, reversed off of it, and then went right back to it and through it. I went ahead and got out positive 1 tick right there, and then when it reversed off of this on bearish divergence from the median line again, after that churn bar, remember that churn means high volume per range, so we know resistance or supply is coming into the market there. Of course, this is the open, this is the regular trading hours VWAP. We're up above the second standard deviation band. Okay, so we're overbought on the RTH VWAP. When it reversed off of that, I put in a limit order to sell. Of course, it didn't get filled, but then when it retraced some of this, and you see the auto line was split right here, so the new auto line starts updating here, and we pull back to it and then reverse off of it. That's where I get in short on that limit order, okay? And you can see that's the highest volume per second, that reversal bar right there. And I got lucky and got filled on my limit order right there at 56. So just barely got filled, and then it pulls back to the auto line again. Another churn bar to end that move, and then it comes down, breaks this low, runs those stops, and I go ahead and get out way too early. But when I run the target for this wave, high to find the next low, you can see we did come down and meet the minimum requirement here, okay? So we were expecting some kind of a retracement, but when you're looking at the overall higher time frame, the larger move, let's do that. Let's look at the 30-minute. Okay, this is what is so key about this. So we go from high to find the next low, high to find the next low. So we would be expecting a move down to the bottom of this channel, and I got out right here long before we even come close to finding support. You see that? So the potential move is to the bottom of the channel, and that's where it did end up coming down to today, and then reversed hard off of that. Really hard off of that, actually. And when we look at the daily chart, the target was the bottom of the median line here, and that's where we reversed off of on a selling climax, and then really a buying climax up out of this low. So we have the extreme spike in the relative volume, over 200% normal volume, so 2 times the average. And of course we came right down to the target here, which is the lower median line. I'm sure that's probably 78.6 as well. A couple of ticks from 78.6 there. Okay, so the low of the day was 58, 78.6 is at 44. So let's just look back at this 1-minute chart again. Let's just delete that, and then draw a trend channel. So from high to the high, and then let's go back to this low. We've got the midpoint here. Let's also draw one back to this low. High to high, back to this low. Actually, let me show you on the 5-minute what else this is, because that's one of the main reasons why I sold that right there. So on the 5-minute, I connected from high to the high. Here we just barely broke through it. We reversed. This is where I got in and then got out. It broke through a little bit. It's yesterday's close. All right, we're right at the open here, obviously at 9 Eastern. And then it breaks down and then pulls right back to that downsloping trend line. All right, so it rolls off of it, pulls back to it. That's that kind of typical pattern you'll see on median lines, pitchforks. After you start drawing the pattern, it will pull back to it and then take off from it. Okay, and that's what we got here. And then of course I exited way too early when I should have had a target to the bottom of this channel at least. So the soonest I should have been looking for an exit would have been right there, the bottom of that channel, or the bottom of the median line, which would have been right here. So that should have been the soonest, and then the ultimate target would have been the bottom of this channel on the 30-minute, okay, which we actually came down to. So that's the reason why the higher time frame analysis is so important. I briefly showed this chart, so I may as well explain it just for a moment. This is the Alto GOM MP. This is a free indicator on Big Mike Trading Forum. I'm showing the naked VPOCs and the naked closes, but just to show what this reversal is right here, if we go from low to find the next high, you can see we came up to the auto line, came through the median line a little bit, and then rolled off of it. So this is the pre-market profile here of this entire move since the previous close, and I'm using 230, the pit close. All right, so this is the entire move since the previous close up to the current open here today. All right, so where it opened was right here. Okay, it opened here, And then when it came down and it pulled back to the VWAP of that entire move. And I showed you that on the ETH chart, but it was a few ticks away from that VWAP. But from the VWAP from the actual previous close at 230, the pit close, it pulled back to the tick, to that VWAP, which is that green line. It's also a minor high volume node there. You can see the point of control was right here. That's the highest amount of volume per that profile. And then we have a little high volume node right there as well. And that's where it pulled right back to, which is also the median line of this kind of ABC pattern, but you can't see that too well in the 5 minute. You need the 1 minute for that. Let's just show that briefly again. So that would be this median line low to low, and then that median line running right to the top there. And of course we have the churn bar at the high, not quite to the ETH VWAP, and then it rolls down from that. And then these 5 minute bars, it just never even looks back until after you get the strong pullback. So we have an attempt at moving higher, and then it breaks that low, and then we finally do start moving higher. Okay, and then of course we have bullish divergence on that low, as you can see on the 5 minute at that low. Bullish divergence in the momentum. Momentum actually got down to about 5 standard deviations on this move. So another really strong move, just like yesterday. And then we end that move on bullish divergence. We start it on bearish divergence in the momentum and end it on bullish divergence in the momentum. And of course that bar is a strong churn bar. And then the last bar here is also a churn bar. Okay, and then it turns up hard, and then of course low to low to find the next high, and it comes right up to the top of the median line right here. So let's just delete everything. Oh, and by the way, this is a one-to-one move. So we have from high to the low, and then we have the 100% expansion right here. And when I do the extensions, the fib extensions from high to low back to this high, look at that, the 161.8 to the tick right here for the low. And then I can delete these lines. And then we can draw that low to find the next high. So a pretty wild day, straight down and straight back up. So anyway, I just wanted to show that to show how important the higher time frame analysis really is. If you're not doing it, then you really have no idea where the potential targets would be, and where you should be trying to get to, and what those areas should look like when they're reached for a possible reversal. Okay, so this is the tick chart again, just to show you from high to high, find the next low, and then of course we come right down to the bottom of the channel right here, and then finally right here before we get that first attempt at a move higher, and then we come back down and break the low. So then I would draw from low to find the next high, and then look at that. The high is perfectly at the upper median line. You see that? So that's why you really need both the tick charts and the minute charts to do this properly. And then what's interesting is when it pulls back to the shadow line of this auto line on bullish divergence in the Chaikin oscillator. And then it turns up. And then of course we would go from low to find the next high, and then that high comes in at the upper median line. See? So you see this over and over and over all day, every day. It's pretty amazing, really. So anyway, I'll end it there. Just want to give you guys another example of tying everything all together.